April was a pretty wild month for the stock market, so I figured I'd just make a video going over my dividend portfolio and looking through, the buys I made, the dividends I received, stuff like that, and how the portfolio is performing, and just my thoughts on the market in general and where I'm allocating cash these days and stuff like that. So, jumping right in to my spreadsheet here, this is kind of as of the end of March. Obviously, I haven't been making videos regularly about the portfolio, but I have been updating the spreadsheet. And I don't know how long it's been since I've updated these dividends, but we have gotten a number of dividend increases, almost 5% there from Travelers, and then 3% there from the Southern Company, which is not bad at all because they have been holding up great during this volatility. 5% from Procter & Gamble, will not complain there, and 4% from Apple, definitely a little bit lower than I'd like to see from them, but obviously they're going to have some troubles with all these tariffs and just the uncertainty around that. 12% from JP Morgan, just trucking along, honestly, and then 5% from Johnson & Johnson, which is solid, can't complain there. So lots of dividend increases is good to see. I have had some dividend cuts, and so my dividend CAGR is not that great, but we'll look average, or the portfolio value right now before April, that is, was just under 14,000. Annual dividend income projected 316, but that's not including anything from my cash, so that's 2.8%, but that's without any impact of the cash and interest that cash is generating. Average 5-year CAGR 5%, so that's not great. And then yield on cost 3.5%, so pretty solid there. So we'll just go over to Fidelity, and what I do is I download all the transactions from the month. We have it filtered out from April 1st to the 30th. So download those and then come back into the spreadsheet, and I just import them. And I've created some scripts which allow me to parse through this data from Fidelity and import it straight into my spreadsheet, which is super helpful. So I'm just going to insert the data, and then I will be able to run this script here, and it'll go through and parse and put all the transactions in the appropriate spots in my spreadsheet, and then we'll go and look at those in a few minutes and see everything I bought and all the dividends I received. April was quite a volatile month, as most of you probably know, so I did make a decent amount of buys. I had total deposits $250, still sticking to that $250 a month into the portfolio, and bought just over $1,000 worth of stock. So pretty excited to be able to deploy some of that capital into the portfolio, and total dividends received $27.96. So these are all the transactions. I bought a bunch of stuff multiple times. So what we'll actually do is go into another sheet I have in just a second. But one thing I want to point out, if we can find one of the transactions here, like JP Morgan on the 30th of April, I have a $4 buy, and same with Cisco on the 23rd, I have a $2.38 buy. And the reason for that is that I finally turned on my dividend reinvestment in this account. I had it turned off, most of the time, 4.5 years that I've had this account open, but I figured since I have a good amount of cash in the account that I don't really have, places to put for the most part, might as well just reinvest the dividends automatically. So that's where these little amounts are. So we'll go over to this tab here, and we can change the date 4/1/2025 to 4/30/2025, and then we'll be able to see everything that we invested into. So the biggest investment this month was HP, actually $286 into HP at an average cost of $23. So really awesome average cost, I think. Then we see our $250 of cash, $245 into Texas Instruments at an average cost below $150. I'm not going to complain about that. $180 into Apple at an average cost of $191, so almost a full share there. $124 into Microsoft at an average cost of $363. And then Pfizer, AbbVie, Air Products and Chemicals, Caterpillar, and then JP Morgan, Coca-Cola, Cisco, and Leggett & Platt were just from the dividends. So honestly, pretty happy with the amount of capital I deployed there. And then we can also see the dividends received in this tab here as well. So $11.42 from HP, $6.66 of interest on our cash, $4.17 from JP Morgan, $2.72 from Coca-Cola, $2.38 from Cisco, and 61 cents from Leggett & Platt. That's a real big loser I have in my portfolio, Leggett & Platt. The stock is down, like way down. I think more than 50% down on my position, and they cut the dividend way down. So it's really struggling. But I guess the way I see it is, I personally don't think it's going to get any worse from them in the next few years, and I don't really have a good place to put the cash if I sold it. So I feel like at this point I might as well wait. I probably should have sold it like a year ago when it looked pretty bad, but the stock hadn't tanked all the way to like $9. But you live and you learn and you make mistakes, and that's part of investing. And one thing I want to look at as well is ticker changes. So I just kind of use this to visualize how, well, it's not really a great visual. I could have some sort of a chart to visualize how each stock performs during the month or whatever time period. So if we look at performance, we can see Texas Instruments was the worst performer in April in my portfolio, down 10%. The best performer actually was Leggett & Platt, which is a stock I was just trash talking, but that doesn't help me all that much. Like I said, I'm still down like 50%. And then most of the other stocks, Lockheed Martin, Microsoft, J&J, just up a little bit. And then everything else flat and down a few percent for the most part. So overall, the market was pretty much flat in April. And, if we look into the transactions tab, we can see most of the buys, pretty much all the buys, well, most of them, there were a few, but most of the buys were in the first half of the month. And then as the market recovered, I wasn't really buying as much. We can look at as well monthly dividends. So we see total for April, $27.96. And this chart over time really starting to see some growth here, which is pretty exciting. Quarterly dividends, $97 for the first quarter, so almost to $100 a quarter. And then yearly dividends already at $125 from the year and totaled $359 in 2024. So that's exciting. And then if we look back on the summary page as well, we can see the dividend income jumped up to $350 projected for the year, which obviously will be above that because of interest on our cash. At least I would assume so. And then portfolio value $14,250 and yield up a tiny bit to 2.8%. Cash in the portfolio right now is still $1,800. So still, what is that? It says over here 13% of the portfolio in cash. So still have a good amount of cash to deploy if there's more volatility, or if the market just goes down. And looking at sectors, very heavy weighted in tech, 32%, and then healthcare, 17% is the next big one, and then everything else is industrials, 12%, and then everything else is pretty small, under 10%. So I would say my allocations in terms of industry and sector isn't that great or optimal, but I typically, at this point, I'm investing for the long term. So, the up and down cycles don't really bother me that much. I'm investing, more than 10 years out. So the up and down cycles that last a few years here and there don't bother me as much. And so, maybe if there's really good buying opportunities in some other sector like consumer discretionary or materials, then I'll really be buying heavy in that sector, and that'll increase my allocation, right? So, I've had some good opportunities with stuff like Johnson & Johnson in healthcare, HP, Texas Instruments in tech, and then also some of the big tech like Apple and Microsoft this past month had some little bit of better opportunities. So that's kind of why those are bigger allocations. And then dividend income by sector, pretty similar, but healthcare is a lot bigger share of the dividend income than it is of the portfolio value. And in terms of performance and investing returns, I'll just throw a screenshot up here of what Fidelity shows me. So we can see year to date, my dividend account here is beating the market, but over the past year and 3 years, we're definitely lagging behind a little bit. So that sort of ties into my overall investing strategy recently, which has been moving, I wouldn't say moving away from individual stocks, but just as my income is growing, allocating a larger percentage of my income just towards simple index funds, pretty much into SPY. So at this point, I have my Dividend account, which I invest $250 a month into, and then I have a kind of growth speculation accounts that I invest $100 a month into. And then outside of that, I am investing, I would say significantly more than that into another account that's separate, that I just pretty much put it all into SPY. And then within my 401k and HSA, I'm pretty much just investing in the S&P 500 as a whole within those accounts. So most of my investments at this point are just going into the S&P 500. And I think, maybe when I get older and have much bigger accounts and am looking to kind of use my investments, I think it could be useful to kind of transition back into dividend stocks in some degree. And the reason for that is to be able to, trade options a little bit with that and increase the income and sell some strategic covered calls at various points, just to generate a little bit more income potentially. But right now, I'm not messing with that. My accounts aren't really big enough for that. So I'm just putting most of my investments, like I said, into SPY and just simplifying it. I'm just getting busier, want to pursue other things, and, putting the time into my investments and individual stocks just isn't really as high of a priority anymore. And, I know this for sure, but I can certainly see it from my experience that I'm not going to be drastically beating the market with my own investment choices. And in this case, you can see I've lagged the market some. So for me, it's just easier, and I think best just to go mostly into SPY and simplify it and not have to spend a bunch of time or stress over it. And looking forward over the next few months and years, I really have no idea what the market's going to do, but I'm confident that in the long term it's going to go up and my investments will perform well. So I'm just waiting, and if we see some more volatility, some more downward momentum in the stock market, I'll be excited, because that is a great buying opportunity, or hopefully it will be a good buying opportunity to buy ownership in these quality companies and industries at a reduced price. So it's like when eggs go on sale at the grocery store, that's like a big deal, right? So you want to buy some more, just like I want to buy some more stocks at quality prices. So let me know what your thoughts are on the current state of the market and how your guys' portfolios are doing. I know this video was a bit of just rambling and spewing, but I just kind of wanted to get it out there and show how my portfolio is doing and what I'm kind of thinking of in terms of my investments moving forward. So if you have stuck around this far in the video, I really do appreciate it. Make sure to subscribe so you don't miss out on any future videos I do post. Even though I haven't been posting all that frequently, I potentially will be posting more at some point in the future, who knows. But thanks for watching, and I'll see you all in the next one.